Hey guys, I'm not going to sugarcoat it. The numbers are shocking to me, completely different from what I expected. Recently, I put up a poll in the community tab, and thankfully 1,000 of you or more actually responded. The question I asked was, did you actually make profits with SPACs in the past year and a half? Throughout the entire SPAC mania, and the numbers are completely different from what I expected. Much worse, to the point where it's actually making me second guess a lot of things that we've done in the past year and a half. So in this video, let's talk about it, right? To me, this is super important. Let's look at the 4 lessons that I actually learned from this and that we can try to learn to improve. And then also, I'm going to show you the SPACs that I have left in my portfolio. I never did that before, and how they're actually performing right now. It's not that great. So let's get started. If you remember, if you guys answered it, right, over 1,000 people responded. Hey guys, did you make profits or did you lose money with SPACs, including positions you still own today? So not everyone agreed with this. But my point here is that if you bought $20,000 worth of SPACs in March or April and you're down 10,000 on them right now, well, we have to account for that somehow, right? Some people say until you sell, you didn't really lose, and I understand that. But if we did that, then almost everyone would be winning, right? If we never count the losses. So 10% of respondents said that they made a lot of profits from SPACs and it was a game changer. This is a category I would put myself in. Like, it totally changed my 2020 and 2021. If it wasn't for SPACs, I might have lost in 2020 because the first 4 months of the year, I got absolutely destroyed with US oil. If you guys remember when oil went down to minus 37, I lost a lot of money in that, right? So when I discovered SPACs and I started to invest in them, I made tons of profits with it, and it became literally the best year in my life when it comes to investing. So I expected that a lot of people would be in that category. So 10% was a little shocking to me. Then 23% for I made some profits. I expected that this would be 40%, 50%. If you guys remember, especially in November and January, you could have almost like thrown a dart at the board, picked a random SPAC, and often they were doubling or tripling in a matter of a couple of weeks. So I expected this number to be much higher than that, especially for my viewers. So then we go down to broke even 11%. I lost a little, but not crippling, 25%. And then the worst category, which totally blew my mind, I lost a lot and regret ever getting involved with them, 30%. So if you total people that broke even or lost, we're at 66%, right? And this is really, really upsetting to me because I figured that everyone was really doing really well with SPACs. So the point of this video, if you're in that category, is not to make you feel bad at all. It is for us to find out like what really happened and how we can actually improve and progress from here. All right, lesson number 1, people that started investing in SPACs in 2020, overall, I feel did a lot better than people that started in 2022. And it's very easy to explain. In 2020, there were 2 big periods that were extremely successful. This is a SPAC ETF, SPAK. It only covers up to September, right? But before that, we had the beginnings of SPAC Mania when there was DraftKings. After that, there had been VTIC, which became Nikola. And then after that, there was Hyliion, which you guys know it went from $10 to about $65 before it started to crash. So this period, if you were investing like at that time, like me, I started that's when I started looking into SPACs and learning about them and investing in them. You made a lot of profits. For example, with Hyliion, I bought the warrants at $9 and I sold them for $22. Wasn't really like greedy or anything. I just sold them when I thought that the stock was too high. So if you started there, you would have had a lot of profits already. Then for a couple months, nothing was really happening with SPACs, if you guys remember. Hyliion was stuck at $17. It wasn't really moving. In fact, it was going down. And I personally thought that, hey, maybe SPAC Mania is already over, right? A lot of people were giving up on them. But then it happened. And this is what really hurt a lot of people. November, right after the election, the SPACs came back harder than ever. You can see it on the chart here. Look at how it spiked massively. Right, so pretty much all of the SPACs, no matter what you bought, they were going up. And I feel like this gave us a false sense of security. In the short term, we all profited a lot from this. Right, companies that ended up not doing that well overall. Tattoo Chef, I love that company. I still have it in my portfolio. I'm going to show you later. But, overall it went to $28. And since then, a year later, it hasn't really moved. In fact, it's gone down. So a lot of us had a false sense of security, but at least we had made a lot of profits. Now, if you invested in SPACs in 2021, then you never got that excited period where everyone was pushing them up. Right? It has been in a very steady downtrend since then. So of course, there were some periods, like if you bought Lucid at 14 and you sold it at 60, then you would still be doing okay. But most people didn't do that. And worse, I've seen a lot of people that actually doubled down on a failing strategy. When it became clear in about March, right, that SPACs weren't really rebounding like they had in November, I personally started to become very sour about them. So every couple days I would look at my portfolio and I would start to maybe I should be selling this one. I feel like it's pretty vulnerable. And if you notice, right, for those of you that have been on the channel for a long time, that's when my channel kind of turned around. People became very, very negative when I was negative about SPACs. I remember when I sold Lightning Motors, when the stock had rebounded a little bit to $14, I got so many angry comments, people saying that I was making a huge mistake, I was going to regret it, and then the stock kept going down and down and down after that. So that was very, very unfortunate. A lot of people doubled down on that failing strategy, probably because of this huge spike in November. We all thought that it might happen again, and I'm guilty of that too. I held some SPACs through May, June, July, way too long, thinking that it was going to rebound hard, and it never did. Well, lesson number one is people that were invested in SPACs in 2020, we got that nice padding of profits that people didn't in 2021. So in 2021, even though we might have suffered some losses on some of the SPACs, well, the gains from 2020 more than made up for it. Lesson number two, greed played a huge role when it comes to SPACs, the rise and fall. So let me bring you back to the times of Hyliion. Back in 2020, it was still fairly new. People were discovering SPACs. People were very, very excited about this company. Now, I made this video where I gave this company a price target of $40, if I recall correctly. Correct me if I'm wrong. You can see the amazing graphics I was using back then. Let me know if it improved or not. But anyway, back then I gave it a $40 price target. And, I felt like that was pretty realistic based on how the stock had been trading. Well, believe it or not, a lot of people criticized me for that, especially when the stock went to $45. People started calling me an idiot, not even joking, right? And people started to shout from the rooftops that the stock was going to $60. And this is something that I really, really found fascinating in the past year and a half. And you might have fallen prey to that, right? I don't even blame you if you lost money in Hyliion or in Lucid or companies like those. You have that phenomenon on YouTube, StockTwist, Reddit, where the more outrageous you are, the more attention you're going to get, right? So I gave it a $40 price target. Then you had people that started to say, hey, it's going to $60. Then there were people that said, it's not going to $60, it's going to $80, right? And more outrageous. Then you even had people that said it was going to go to $100, $150, and people just grabbed onto that and wanted to learn more. Like, hey, is it really going to go to $100? It keeps going up. So people fed into that, and then they bought higher and higher, even though it made no sense. If you actually looked at the valuation, anyone with a brain would have realized that Hyliion, which had never delivered a product, was not a $15 to $20 billion company. There was just absolutely no way to rationalize a price target like that, right? Even if you were looking at the technicals and everything. So people lost a lot of money with Hyliion, and the reason why I'm showing it to you, right? Look at the massive spike here, which I was wrong earlier. I said 65, I think, but it never got to 65. I think it peaked at 58. But look at the massive crash after that. Even recently, we had an analyst that gave it a $5 price target, right? So the stock has completely collapsed. So anyone that bought into it, right, is probably losing at this point. Now, why am I talking about Hyliion, which was in 2020, and maybe a lot of you weren't even investing in SPACs back then? Well, in 2021, we had Lucid. And look at how the chart is almost identical to Hyliion. And that's why I told a lot of people to take profits on Lucid. and they didn't. Now, I know a lot of people invested a lot of money, like six figures in the teens, $14 to $16. And they rode the wave up. They sold at $50, $60, and they made, in some cases, life-changing money. But then there are also a lot of people that follow YouTube videos, follow Reddit, follow, the other platforms, and people were telling them, hey, Lucid's going to $80, it's going to $100, the company is going to be worth over $100 billion, right? So even if the price didn't really make sense, in fact, we didn't even know what the valuation was. A lot of this was before the official announcement, right? This was entirely based on rumors. And despite that, people were paying those $40, $50. I know people that bought the warrants at $25, $30. It just did not make sense. And if you had understood the lessons from Hyliion, you would have known that this was the likely scenario that was going to happen, right? So that's why I don't really blame people that that fell prey to that and probably lost a lot of money with Lucid and other stocks like those. But you have to realize that there's that herd mentality, and we are in 2020, 2021, where like you really get most attention when you give outrageous price targets. Right? Is it going to be a 10x or is it going to be a 100x? So that is lesson number 2. Greed played a huge role in the rise and fall of SPACs, and you really need to be careful with people that give those really crazy valuations, and they don't really care, right? Once they got the click and they got your attention, they don't really care if their prediction comes true or not. It's just a matter of getting views so that they can make profits from their YouTube videos. They don't really care, if you're successful or not. Lesson number 3, the most important one, and I'm looking at you specifically. This probably applies to you, it applies to me, it applies to everyone. There has been a lot of sunken cost fallacy involved with SPACs. This is one of the human psychology flaws. We have commitment bias, especially when it comes to investments. We tend to ride or die with an investment, fall in love with it, and even when it's proven that we might be wrong, we constantly find rationalizations why no, we're not wrong. We made the right decision and other people are wrong. Nothing has been more evident than with Lordstown. Lordstown, I actually analyzed the company. On paper, there were a lot of things I liked with it, right? And the stock went up to $30 3 different times. There was a lot of enthusiasm about this company. But over time, we start to realize, hey, there's some things that are not that good about the company, right? There's a lot more risks, there's delays, the CEO is not necessarily totally honest and everything. But again, we're going back to the echo chamber. Some people on YouTube, you guys probably know what I'm talking about Lordstown, and now it's the best company and everyone else is wrong. Lordstown, workhorse. But what happened with these companies? They're all crashing and burning. And yet, you will still find people that will find excuses and defend these companies. When the Hindenburg research came out and talked about the prototype, catching fire, and now the company had a lot of delays and all of that, I scoured the internet. I looked at a lot of Reddit posts in the Lordstown community. I looked at stock tweets, looked at some Lordstown videos on YouTube, and people were in total denial. They did not want to accept that maybe their investment, they made a mistake on it, right? They didn't want to cut their losses. They just wanted to rationalize that Hindenburg research was wrong, they were right, and the stock was going to recover. Hey, Steve Burns told us that they're going to start production in September. Steve Burns told us that they're almost ready for production. You guys remember what I'm talking about? Steve Burns with his hard hat, going on TV saying that they had hundreds of thousands of pre-orders and all of that. Well, this is one of the big problems. So just keep in mind that this is a character flaw that we all have. I know some of you personally that still have SPACs that aren't doing anything, don't have any big prospects of recovering quickly, and you're holding on to them not because you think they're about to go up, but because you're already invested in them, you love those stocks, and you kind of find rationalizations why it is going to recover. So we all have that flaw. I'm going to show you now my portfolio in a second, and I still have some of those too, right? So I'm not perfect either. Lesson number 4, last one, timing the market actually matters a lot for smaller investors. There's this misconception that if you're going to be a long-term investor, the price doesn't really matter. You can just buy, and on the way down, you're going to average down. This is not true. I mean, this is very, very misleading because most smaller investors, this is the truth, they're going to be buying once, maybe buy the dip, maybe in rare cases buy like a third time, but almost no one actually buys consistently over weeks, if not months. That just does not happen, right? So we're not Kathy Woods that has unlimited funds in her ETF and will buy a stock for months. And look at Pat, right? She's done that. She started buying it very, very expensively. And even though the stock price keeps dropping and dropping and dropping, she just buys more over time. Well, us, like you and me, we're not like that. Usually what's going to happen is if we look at Lightning Motors, someone buys into the stock for $12 or $13. The stock goes to 17, yay, like we have nice profits. Then it drops to $15. We think, hey, everyone tells us to buy the dip. That's what makes sense. So we buy the dip, right? But then it drops to $14. Then we buy the dip once again. And then what happens is, in a case like this, with a lot of SPACs, it just continued to go down and down and down. So not only did we compound our mistake, not only did we actually buy more shares than we actually wanted to, but we turned a nice profit into a big loss because we never timed the market correctly. We didn't look at like when it made sense to exit that position. So this basically combines like a lot of what we've seen before with sunken cost fallacy and timing the market. All right, so this is a big mistake. A lot of people have done it, me too. And the reason why we do that is just because we don't want to admit that we timed it improperly. We made a mistake. All right, so I'm going to show you now my portfolio. Some of those stocks, I believe in them long term, but I have to be honest with myself and say, admit that I made a mistake, I didn't time it right, and for now I'm bag holding them. Alright guys, in the wrap up to the video, no one's watching at this point, so I can just show you my losses and my own mistakes. This is my portfolio of SPACs. I barely have any of them left, and I got rid of most of them over the past few months, and now my portfolio I feel is a lot better. But since it's a lessons learned video, let me show you the ones I still own that I made mistakes on, right? So first we have Play Studios. This one I'm down 30%, $4,000, $10,000 approximately value right now. I have 2,000 shares, and I start buying into the stock at $7.87. Now, the big mistake I did is it was going down, and instead of waiting until it stabilized, I was like, I'm just going to be a hero. I'm just going to be a long-term investor, and I'm going to buy more as it goes down. I'm going to average down. But what happened is, yeah, it started to go down, down, down. I didn't think it was going to go under $6, but it did. So I was buying shares, and then when it reached like $4 and $3.80, I was like, well, do I really want to put more than like $10,000 in this stock right now? I don't know when it's going to rebound. So I didn't buy more under like $4 or anything like that. So now I've been bag holding the stock for a few months. I still have very, very good faith that it's going to rebound, but overall, I just have to be honest with myself and with you guys and say that it was a mistake and I mistimed it. That's the end of the story. Right, moving on. Then we have Tattoo Chef, another company that I like a lot long term, but I kind of made mistakes on this one. So originally I bought into it when it was a SPAC. I talked about it a lot on the channel. Then I kind of sold out of it, and then I rebought at the wrong time. So currently my average price is $18.85. I have almost $22,000 worth of Tattoo Chef. All right, so again, I bought in the 19s and then it was going down. Hey, $17, let me buy 100 more shares. $16, let me buy a little bit more. But now I have $22,000. The stock's at 15 bucks. Am I going to put another 20,000 to bring my cost down? No, I'm not. So again, that is the big problem that I was telling you guys. Even when you think, hey, I'm just going to average down over time, well, usually you kind of run out of money, right? Your position is not the way it should be, and then your cost basis tends to be too high. So I'm only down 900 for this one. It's not a big deal, especially since I'm selling covered calls, so I'm actually making cash flow on that. But overall, again, I have to be honest, I mistimed it. I've been holding this since March and April, and so far it hasn't really done anything. All right, third one, we have Catapult. This one, you guys know the story. It dropped 50%. I was like, $4, kind of ridiculous for this stock, even though I don't really like it. Right? I call it the poor man's firm. Well, still, you know, $4 is a little too low, so I bought into it. This one, we're up $570. And then SoFi is the last SPAC in this account. I had sold the warrants. I talked about this story many times. I sold the warrants, made $6,000 in profit. So I bought the warrants at $6.51. I sold them at $9.45, and that's great. But the big mistake I did is then I replaced as the stock was going down, I bought back in too early. I replaced the warrants with some shares, right, at $20.97. Oh my god, I want to throw up. 400 shares. I have $8,000 into it, right? I'm down 820 on it. So overall with SoFi, I'm profitable because of the warrants, right? But I have shares of this also in SoFi. I have shares in Webull. So overall, I'm just basically breaking even on SoFi right now. My goal, once again, was, hey, I'm just going to buy shares now. As it goes down 14, 15, 16, I'm just going to buy more. But then it kept going down, so I was like, well, I might as well like just wait until it stops going down. And then I never bought more shares. So my last chance, I feel, is later this month when the warrants become exercisable. I feel like that's probably going to be our last real buying opportunity. So that's what I plan to do. I plan on like hopefully lowering my cost basis, you know, when that happens, if we see like a dip. But overall, kind of mistake again. Like I bought into it, I traded it, and so far I'm just breaking even. So those are all the SPACs I have left. I have options on other SPACs, right? But as far as long-term buy and hold, those are the ones I have. And as you can see, most of them are in the red right now. So not by like tens of thousands of dollars, but this is all money that I could have put in other growth stocks and been more profitable at this point. So guys, I hope you enjoyed the video. Big bad lessons that we've learned collectively with the SPACs. I'm very, very surprised that 66% of people were unsuccessful. But as you can see, like even myself, all the SPACs I bought in 2021 that I still have, I'm not really profitable with them at this point. So maybe in the future, but for now, we have to say that collectively, SPACs have been a failure. And personally, I'm kind of happy that we're moving on to like more real investing and less gambling. So I hope you enjoyed the video. Please like and subscribe. The Discord link, the Patreon link is in the description. And I'll see you guys in the next video.